Hi, this is Dan Encell, Prudential California Realty. Today is Friday, July 23rd. It's been quite a while since we've done a market report there, and you probably noticed the new surroundings. We've moved upstairs to a new office here. So let's talk about what's gone on since we did our last one. It seemed like the market, after the expiration of the federal tax credits, definitely faltered, which everybody was expecting. Saw a little headline, home prices rise in April. That was just before the tail end of the expiration. They actually expired the end of April there. Following that though, which is no big surprise, May home sales dip as housing market struggles. Again, that was expected. Once the credits were gone, there was a built-up demand beforehand that leveled off there. Big question is what was going to happen after, a couple months after the credits there. The answer is it's still a little too early to tell, but I don't think anybody's pleased with the results that they're seeing out there. The good news out there, mortgage rates sink to the lowest level on record. They are absolutely phenomenally attractive at all price levels. Up until very recently, the conforming loans, the lower price loans, were very attractive across the country there, but you just couldn't get financing for jumbo loans at all at any price. Last couple months, jumbo loans are available for people buying more expensive properties. Not only are they available, they're available at really attractive rates, lowest rates they've ever been. So really encouraging to see that on the horizon. First necessary step to the high-end market actually starting to recover, and we are seeing some signs of that there. Another headline here, again, no big surprise. New home sales plunge with tax credits gone. That doesn't catch anybody by surprise, but it is an interesting headline. So, what's happening more recently? Joblessness, still the biggest problem out there. People don't have a job, or they're not secure about their job, they can't make their payments, or they don't want to buy a new home there. So unemployment still probably the largest problem affecting the housing market. And conversely, probably the housing market is the biggest problem affecting employment. They are very tied to each other there. So neither one is going to be able to be sustainable in any sort of meaningful recovery without the other. We need jobs for people to have the ability to buy and keep their homes. We also need to have strong real estate for people to be able to keep jobs and create new jobs. They're very tied to each other there. Home builders losing confidence in recovery. Again, that can't take anybody by surprise there. We're not looking at a market where it makes a lot of sense for people to go out and build new homes. There's still a glut of inventory on the market. People can still buy brand new homes that are in distress for less than the builders could probably turn them out for. So again, it shouldn't be a surprise to people that the home builder industry isn't feeling rosy about their future. They shouldn't be. They've got a tough road ahead of them. Toughest thing out there, 1 million homes on track for foreclosure in 2010. That is a record. First 6 months of the year, there were over 528,000 homes that have been foreclosed on. So again, if that pace keeps up, that'll push us to over 1 million homes in foreclosure in just 1 year. Not a huge surprise in terms of the fact that it's a big problem. I just think it's a bigger number than people were expecting there. So that's a bit problematic. And the other unknown factor is there is millions more homes that are somewhere in that pipeline, that are somewhere in distress. So how many of those end up as foreclosures, and how long it takes for them to actually get into and out of the foreclosure process, still a bit of an unknown. And they label that shadow inventory. So if you hear shadow inventory, that's what they're talking about. Distressed homes that they know will come in the foreclosure process at some point, just not sure when and to what extent there. That's really about the major headlines since last time we talked there. Locally, it's actually a bit rosier picture than on the national level there. Again, largely due to the fact that there are loans out there for high-end properties. So we're seeing a lot of sales at reduced prices, but nonetheless sales of larger properties in our area. So the buyers no longer have the ability to wait and watch inventory levels build and watch prices decline. They're forced to make a decision now between shrinking inventory versus prices that probably still haven't quite stabilized yet. So we are seeing buyers step into the market and buy some of these attractively priced, well located properties there. So that's it for now. Next week we're going to give an update on the first 6 months of 2010 locally, on where we are, what's happened so far, and where we expect to be going for the next half of the year.